I think we're in a digital gold rush, and you've got 10 years to acquire all your Bitcoin before there's no Bitcoin left for you. The competition is a virtuous competition. Metaplanet's the hottest company in Japan right now. They went from 10 million to $1 billion market cap to a $5 billion market cap. They're going to raise billions of dollars. They're going to pull the liquidity out of the Japanese market. So they'll be raising capital in Tokyo and the Tokyo Stock Exchange. Obviously, none of the rest of us are trading or selling equity in the Tokyo Stock Exchange. So it's not competitive. It's cooperative. There are companies coming public in Brazil right now, like Orange BTC, that'll come public in some time frame, and Melius. They're actually supporting equity capital markets in Brazil. The GameStops, they already had $6 billion of capital. And so for them to start to take some of that capital and funnel into Bitcoin, it's good for all of us. Nakamoto in 21, they'll bring their own particular twist. Our company is a very particular business model. It's to issue Bitcoin-backed credit instruments like Bitcoin-backed bonds and especially Bitcoin-backed preferred stocks. We're the only company in the world that's ever been able to issue a preferred stock backed by Bitcoin. We've done 3 of them in the past 5 months. We're not competing against the Bitcoin treasury companies. We're competing against ETFs like PFF, that have portfolios of preferred stocks or corporate bond portfolios that are trading as ETFs in the public market. And the way we compete is we offer 400 basis points more yield on an instrument that is much more heavily collateralized and more transparent. And we're not going to saturate that market anytime soon. That's $100 trillion or more of capital in those markets.
It sounds like, when you talk about what you're doing in terms of financial engineering, in terms of financial markets with Bitcoin, clearly you're doing a lot more than just holding the Bitcoin. So it's, I think, unfair to compare you to an ETF, but it sounds like you may be inviting competition from a JP Morgan, for example, which then makes me wonder, when does this asset start to convince the naysayers? Jamie Dimon has famously said it's worthless. Warren Buffett has called it probably rat poison squared. When does it win those people over?
People called electricity worthless and aircraft worthless too when they didn't understand them. So I welcome the competition from JP Morgan. I hope they enter the space. Our advantage is that we're 100% Bitcoin. So whenever we create a preferred stock, it has the Bitcoin performance, and it has a measure of Bitcoin performance and a fraction of Bitcoin volatility. That allows us to issue the most liquid preferred stocks in the world at the highest performance. Strike was up 29% when the rest of the market of preferreds was down 6%. Strife was up 22% when the rest of the market was down 4.6%. It's impossible to issue Bitcoin-backed convertible preferreds and Bitcoin-backed fixed preferreds unless you're willing to make 100% of your balance sheet Bitcoin. So I'm not really worried about competition from JP Morgan or Berkshire Hathaway. I would love for them to enter the Bitcoin space, buy up a bunch of Bitcoin. When they do it, they'll be paying $1 million of Bitcoin. The price will go to the moon. That will be good for the entire crypto economy and beneficial to everyone that holds any BTC-backed equity or credit-based instrument.
How do you expect the asset to continue a price increase at these levels that we've seen? I mean, can it keep that up over the next 5 years, over the next 10 years? And at what point do we see, winter coming again? Because that's been a permanent fixture of this asset class, right? It's gone from 0 or 1,000 to 20, and then back down to 3 or 4, and then up to 50, and then back down to 15, and now up to 110. Like, when does it drop again?
Winter's not coming back. We're past that. We're past that phase. If Bitcoin's not going to 0, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The cabinet supports Bitcoin. Scott Bessent supports Bitcoin. Paul Atkins has shown himself to be an enthusiastic believer of Bitcoin and digital assets. Ken Tez at CFTC feels the same way. The banks are going to custody Bitcoin. Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers. That's the miners. At this level, that works out to about $50 million of Bitcoin available for sale every day. If that $50 million is bought, then the price has got to move up to find any seller that's price sensitive. Now, if you do the math, you'll actually see the Bitcoin treasury companies by themselves are buying the entire natural supply.
Yeah. BlackRock
and the ETFs are buying another measure of that. And we've got nation state actors coming into the space. So I think when Bitcoin rallies, if it surges to 500,000 or $1 million, then maybe we could talk about it crashing down by $200,000 a coin. But at the current price levels, it only takes $50 million to turn the entire drive shaft of the crypto economy one turn. And you've got the Trump media organization announcing $2.5 billion. You've got GameStop announcing $500 million. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher.
And when it comes to your own financing and the fact that you have been pivoting to issue more preferred stocks to fund your purchases, why is that? Why go towards preferreds rather than convertible bonds? Is it just a question of demand, or is there something else to it?
The convertible bond market normally is a short duration investor. They want to hold the bond 3 or 4 years, and the calls that are embedded in the bonds are capped calls, capped at 130% of the strike, of the conversion price. And so that's a short duration call investor and a short duration credit investor. What we sold with Strike, STRK, was a perpetual call option, good for 100 years or forever. And then we sold a perpetual dividend you could hold for 100 years and give to your grandkids. So long duration credit, long duration call, and that preferred never comes due for us. So we don't have liquidation risk, we don't have credit risk. So it's a much better instrument if you intend to invest in a volatile asset like Bitcoin and hold the investment forever. Now, the other point I'll make, Katie, is if you think about what we're competing against, there's like $80 billion worth of corporate credit and preferred equity-based ETFs that we identified. Most of them charge a fee of 50 to 80 basis points a year. Most of them generate a yield of 6 or 7%. And most of them have very heterogeneous, opaque credit, low volatility, and very low liquidity. We're offering preferred instruments that have 8 to 10% dividend yields at par, 10 to 100x higher liquidity. They trade really, really hard, very, very liquid.
Right.
And they're homogeneous credit, and they're 6x over collateralized. So it's a very compelling instrument if you believe in Bitcoin as a digital asset.
So just to finish the thought here, and I'm looking at Invesco's preferred ETF, the ticker there is PGX. That charges an expense ratio of 51 basis points. It has about $4 billion in assets. When you say that you're in competition with funds such as this one, are you referring to the fact that you're competing for investor attention with these ETFs? I just want to make sure I'm understanding your point.
Yeah, what I'm saying is you go buy that and maybe you get 7% yield effectively, and you pay the 50 basis points. And some of that is QDI eligible and some of that is taxable. When you buy one of our preferreds, like Stride is yielding like 11% plus right now, and Strife is yielding 9.5%. You buy that, it's all QDI eligible. It's trading 10 to 50 times more liquid on a dollar for dollar basis. It's very homogeneous credit, and you get an extra 400 basis points of yield, better tax treatment, et cetera. So we're actually competing against that. We're offering tax efficient, zero fee fixed income yield to someone that wants to hold that in their portfolio.
Michael, I would, at least in the top 5 most important characteristics of Bitcoin is its security, right? I mean, scarcity has to be one near the top, and the ledger obviously was a genius move by Satoshi, but it seems to be uncrackable. And I'm wondering if that will hold true far into the future with the development of quantum computing. Do you worry about that?
I don't worry about it. And I make the point, Microsoft and Google market their quantum projects, but they would never sell a quantum computer that cracked cryptography because it would destroy their own companies. And there isn't a practical use case for those quantum projects they've been marketing. I think at some point, a decade out, maybe 10, 20 years, maybe whenever, there'll be a powerful computer. It may start to threaten modern cryptography. When it does it, it'll be a threat to Microsoft, Google, JP Morgan, the US government. It may be a threat to Bitcoin. When it is a threat, all of these organizations are going to upgrade their crypto protocols to be quantum resistant. You'll see it coming a mile away, and every other digital entity in the world is more vulnerable to that idea or that threat than Bitcoin. And so they're all going to upgrade, and we'll be talking about it while you're reviewing Microsoft stock or Apple stock exposure.
I don't want to go too deep into this, Michael, because it's only a half-hour program, but I feel like AI could, everyone's worried that AI may turn on us, and this could be a way in which AI has real power. Is that not the kind of thing that keeps you up at night?
I'll make a point here. The typical person might do 10,000 transactions in their lifetime, maybe 100,000 if they're very busy. The AIs are going to do 100,000 transactions a minute. They're not going to suffer the existing credit systems and the existing banking systems of the 20th century. They're going to want to move digital money at high frequency at the speed of light. That means digital assets like Bitcoin over the Lightning Network or via layer 3 protocols. The demand for digital capital, which is what Bitcoin is, and digital networks like Lightning and like all of the crypto protocols that are being worked on right now, it's going to go through the roof. So I think AI is really a demand driver for Bitcoin. It's going to accelerate the entire digital assets economy. And no, I'm not worried about the threat. The AIs can't crack, public-private key cryptography. What they can do is imitate you and talk you into doing something stupid if you're listening to them. And so they're a threat to all the other systems in the world, not to Bitcoin.